party.
That's correct. Well, that's always been the worry around the AI trade, or one of the main worries, is that we've seen these big numbers. For instance, OpenAI's intent to spend more than $1 trillion on the infrastructure build out. And then the question has been how much of that is real, how much of that can be reneged on. And when you have a company like NVIDIA with a big number that they came out, remember, in the press release initially in the fall, they said they intended to spend that $100 billion. Now they say, oh, maybe not. We'll just evaluate it bit by bit. That does start to throw in the entire number into question, because you say, okay, if NVIDIA can do this, how many other deals are there out there that have some element in them where it's possible that OpenAI won't actually end up fulfilling that promise? Now, I do think they're going to end up getting a ton of money. It looks like they're going to raise, in the neighborhood of $100 billion in this new round. But I do think the number that NVIDIA does put in this round is going to be very important, because it's going to signal how far and how strongly behind OpenAI that company is. So we're going to see pretty soon what that looks like.
The other thing, Kate, I suppose, is as you've been talking about and reporting on this race to go public, if it is in fact a race between OpenAI and Anthropic, once you go public, we get to see everything, for better or worse. You get to see everything.
I have a feeling
you have a clearer picture of what the financials actually are, what money's real, what expectation versus reality.
I think, Scott, that's a great point. The prospectus, I have a feeling a lot of people are going to be excited to dive into what that actually looks like on whichever OpenAI or Anthropic ends up going first. I think the profitability, kind of how unprofitable these companies are, gross margins, or just there's so many questions on the extent of how unprofitable these are. And, Sarah Fryer has talked about some of this compute spending really going straight to revenue and saying that there is a direct translation. It makes sense. They've thought through it. I would also just point out the amount of leverage that NVIDIA seems to have in all of this. OpenAI is really central to this AI ecosystem. I think it's a great point, Alex, that they are really tied to everybody now. So they're central to this AI economy and really the global economy at this point. They've really tried to sort of diversify away from NVIDIA as well. You've got AMD. You've got a lot of other partnerships that they're trying to kind of strike. So you wonder if this sort of forces them to also look outside NVIDIA and kind of increase the diversification when it comes to sort of their chip supply and what that actually looks like. But NVIDIA seems to have the last word on all of this.
I'm sorry. Last word, Christina, on that point. Everybody's tied to everybody. And diversifying your stream of revenue around a little bit may not be such a bad thing.
And then you could say the same thing for investors, too, which is why so many of them have pulled out of compute names like NVIDIA and Broadcom. But NVIDIA does have all the leverage, to Kate's point. There's no doubt about that with every partnership they have. I do believe that we're starting to see in the end of 2025, 2026, really, for investors, the diversification away from the high-flying compute names, and even AMD getting more love as of late compared to just last year alone. So it's an opportunity to seek out. I just wonder how much more upside when you're looking at all of these memory names, you're looking at all these storage names, and NVIDIA still has two catalysts. You have February 25th, the earnings, and then GTC on March 16th, where I'm sure we'll hear more about just the production and ramps and everything like that, which should be a good catalyst for the stock.
Oh, yeah. All right. Great stuff. You guys are awesome. Thanks so much for that. We'll talk to all of you soon. Kate, Christina, and AK. We're getting some news out of D.C. Emily Wilkins has that for us now. Em, what's up?
Hey, Scott. Well, we are on shutdown watch right now. And now we have President Donald Trump, who is weighing in, telling lawmakers that they need to go ahead and pass that funding bill ASAP and get it to his desk to end the shutdown. This, of course, comes as a number of Republicans have voiced concerns with the bill, that it doesn't do enough when it comes to funding the Department of Homeland Security. Others are saying that they're not going to support it unless it includes language that would allow for stricter voter ID requirements. And basically what Trump is saying in this brand new Truth Social is, hey, put all that to the side right now. We'll get to some of it later. Right now, we just need to reopen the government again. This, of course, coming just a little bit after the Bureau of Labor Statistics announcing that they are not going to be putting out job numbers on Friday because of the impacts of the shutdown, and they will reschedule a new date as soon as the government reopens. That could happen as soon as tomorrow afternoon, but it is likely going to take either all Republicans being able to vote and move together together, or some Democrats potentially crossing the aisle. And neither of those at this point are a guarantee. Scott?
All right, Emily, thank you. Emily Wilkins, still ahead. We dig into Disney. Why is that stock selling off today despite record earnings? It's down almost 7%. We'll answer the question next.
The Bond Report is brought to you by PIMCO.
Yeah, good evening, everyone. We are waiting for Palantir's fourth quarter 2025 result. This is our first live stream event that we are going to be having for Palantir. This company is a company we've been following for more than 5 years now, and Palantir seems to be the AI darling The stock really has underperformed in the last maybe less than 2 months, but towards the end of December, we have seen that stock really pulling back. If I actually go to my stock chart for Palantir, I'm going to just let's just see how this stock has performed so far in the last couple of months. If you can check, if you follow the chart, you can actually see that the stock really has pulled back for the past couple of months, and at the end of the day, a whole lot of questions are being asked. Is Palantir going to really show that is going to meet up with the expectation of Wall Street? It is yet to be seen. We are waiting keenly to see what Palantir reports today, and at the end of the day, it's going to really show whether this stock or this company is able to live up to the expectation of Wall Street. We are going to be diving into the entire result. The third quarter result that was released last year. We'll be diving into that. We'll be looking into what Palantir reported in 2025 third quarter, and also setting the expectation for 2025 fourth quarter. What exactly are we expecting? So let's just take a breather, and I will bring that up shortly. So we are just less than 15 minutes to the closing bell on Wall Street, and we are expecting Palantir's fourth quarter result. I'll be looking at the stock price in the last couple of months. Palantir stock really has pulled back aggressively, and for so many people, this stock was expected to finish last year on a very, very big bang approach. But if you check the last 6 months, the stock actually pulled back. But the full story is that in the last 1 year, the stock really did exceptionally well, and Palantir is a company that a whole lot of people actually feel that the stock really is priced to perfection. Let's rewind back a couple of quarters down the line. In the last 2 years, Palantir was not a member of the S&P 500, which is the most sought after index or market index in the world. The S&P 500 basically is the barometer for the global stock market because it's the most sought after, the top 500 companies quoted in the US. Palantir entered that elite group. The company didn't just become an S&P 500 company. It was also reporting for the first time a $1 billion per quarter revenue, and the company even beat that estimate for the third quarter, and the fourth quarter Wall Street is expecting a whole lot of positive things, and Palantir must not just meet estimate. Palantir must actually beat estimate because there is a consensus that the company is priced to perfection. The company's stock is priced to perfection. So there's a whole lot of expectation as Palantir grown its commercial revenue beyond what was expected, or is the commercial business slowing down? It's yet to be seen. Let's just expect Palantir to do better. But expectation is not just enough. The company needs to prove it. I will be looking at the third quarter result just to actually put things into perspective. Yeah. And So we are welcoming everyone to today's live stream. We are expecting Palantir to report his fourth quarter 2025 result. This is our first live stream that we'll be having since Palantir became a public company, since we've invested in this company. We've been following this company. We are a stalker team. We are an education and coaching platform and guidance platform for retail and long-term investors. We don't give professional licensed or financial advice. We don't. Every information shared on this live stream is for information and education purpose only. So please do your due diligence and consult your financial advisor. We will be starting in earnest. We are just less than 9 minutes to the closing bell on Wall Street. Wall Street is really agog today. We have seen the stock really went as high as, let's just check the intraday. Yeah, the highest point was around around 150 ish, $150.79 each. The stock, like I said, in the last 1 year is down by over 17%. The stock in the last year to date, Palantir is down by 17%. In the last 1 year, Palantir did exceptionally well, although it pulled back towards the end of last year. But you can actually see that it is still sitting pretty at 76%. Just to put things into perspective, the almighty S&P 500 actually even struggled to do up to 15%, if I'm not mistaken. But let's bring that up. Let's just do that comparison and we'll be able to see what exactly how Palantir actually fared better. So if we check the last 1 year, the almighty S&P 500 just managed to actually do about 15 or almost 15%. Compare that to Palantir, it did over 76%. That is very, very impressive if you compare Palantir in respect to S&P 500. Also, if you compare Palantir maybe to the bellwether of the AI ecosystem, which is NVIDIA, let's just compare as well. So that's why if Palantir has pulled back in the last couple of months, it is not necessarily because the stock is doing so badly. It's because the stock has really ran very, very high. You can see NVIDIA did in the last 1 year about 58%. In year to date, NVIDIA has been able to struggled. NVIDIA really struggled, but NVIDIA has not done badly. Yeah, less than 1% or even still negative. But Palantir has really gone negative, which is a major pullback. You might call it a correction, depending on where you are coming from. But at the end of the day, Palantir really is delivering, and the company is really doing what it's supposed to do. So that's that. We are now 6 minutes to the closing bell, and the result should actually be coming in almost immediately after the closing bell, and we are expecting Palantir to release that result. So if you can hear me, or actually, so if you have any question, if you have any feedback, please feel free to share, and we'll just catch a breather and we will start the analysis of the third quarter 2025 before that result, the 2025 result, Q4 and full year, it's the tape. So let's just catch a breather for about 1 or 2 minutes. Yeah. So, like I said, we just took a short break. We will go into the last quarter result um, for Palantir, which is the last third quarter result. Let's look at that so that we can put things into perspective. We are just 3 minutes away from getting the full year results, the fourth quarter result for Palantir. That will be eating the tape any moment from now, and we just wanted to have a feel of what happened last quarter, and that really was a defining result for Palantir. Is Palantir ready to actually break this record? It's yet to be seen. Let's look at that presentation that was used to mesmerize Wall Street, that took the stock, although the stock actually tanked, after the result, but a few weeks after the result, the company's stock, Palantir stock, went went ballistic, and it performed over 70 something, 76%, even when the stock has been down by 17%. So in the third quarter 2025, Palantir released a result. US revenue went as high as 77% year on year, and quarter on quarter, which is Q3 2025, went as high as 20% to $883 million. US commercial revenue, which is massive, which is huge, grew as high as 121% year on year and 29% quarter on quarter to $397 million. US government revenue grew 52% year on year and 14% quarter on quarter to $486 million. So is Palantir going to break this record? And of course, the Rule of 40 score, which is the score that a whole lot of software companies actually use to gauge what they are actually doing in terms of profitability and growth. Palantir's Rule of 40 is the highest in the entire industry, in the entire ecosystem. It was as high as 114%, and no other software company comes close. Not even Salesforce, not even Databricks, not even a few other SaaS companies that out there. Palantir closed a total deal of 204 deals of at least $1 million each, and 91 deals of at least $5 million each, and 53 deals of at least $10 million each. So that's what we have as per Q3 2023. We are now prepared to get this result. Wall Street has closed. Closing bell can be rung now, and we are waiting for Palantir's Q4 2025 and full year result for 2025. So without further ado, we will go to the X channel for Palantir so that we can actually get that result as it comes on deck. We will also be joining CEO Alex Karp, who will actually be giving us the report of the board. I will be hearing from the CFO. We'll be hearing from also the Chief Technology Officer, Shem Sankar, and as well, we'll be hearing from a whole lot of analysts on Wall Street, what they actually think that Palantir is actually going to be doing going forward. Palantir is a company that says we build software that dominates. Is this result going to dominate the talk of the town tomorrow? We are very, very on deck to get this result. So if you get it first, fastest finger, you can put that in the chat. If you don't get it before I get it, then we can always share. I can always share. So we are waiting for Palantir. Yahoo Finance, Google Finance, everywhere is on deck now, and we'll be also be listening to the CEO, which might be maybe about 30 minutes after the result is the tape. So we are just 1 minute past 9 p.m. now. Wall Street has now closed. Palantir is what we are expecting now. I'll just also continue on the analysis before we get that result. So for Q3 2025, we saw adjusted free cash flow of about $540 million. Margin was about 46%. We also saw operating income growing as high as 51%. We are waiting for this result, and it could hit the tape any moment soon. Let's just keep our fingers crossed. We also saw a whole lot of other, other metrics that Palantir reported on. We saw Palantir in Q3. They announced the relationship with NVIDIA. Palantir said is probably the single most important enterprise stack. According to Jason Wang, said, Palantir is perhaps the single most important enterprise stack in the world, which is the Palantir ontology. That partnership has now grown into a software platform, AI software platform called Chain Reactions, and it's actually really now in use in partnership with NVIDIA. We also saw mega deals in Q3. Palantir and Lear, which is an auto part maker, one of the largest in the world, if not largest. A whole lot of the upholstery that is being used. They said Foundry allows us to focus on what matters, keeping our plants running smoothly and delivering the highest quality product in the world. So AI that actually lets people dominate and lead. We saw battlefield innovation at full speed. The Titan was now in full use. We are waiting the result. I will just play some tempo music while we wait for this result, because this is perhaps the most important result in the history of Palantir. A whole lot of expectation has been built. The stock, like I said, has really pulled back as high as low as 17%. Even when in the last 1 year, the stock has still outperformed the S&P 500, by fourfold, but it is still not a good one. That at the beginning of the year, the stock is already down by 17%. So what this result is going to actually show is that a whole lot of the expectation for Palantir to outperform has been built into this result. So if we see an outperformance, even if we get a pullback in the next couple of weeks, when this result is digested, we could actually see Wall Street actually giving Palantir its flowers. Is the rule of 40 going to go as high as 132%? Perhaps that is also something that we should look for. So I'm just trying to see if that result has dropped. Let's just see. Let's see if the result has dropped. Okay, so we are waiting. And the results should drop any moment from now. I'll be checking across Yahoo Finance as well, and we will also be able to see. Yes, the result is now out. Yes, for Q4 2025, Palantir reports revenue growth of 70% year on year. That is massive. And a rule of 40 score of 127%. Full year 2026 guidance, Palantir is issuing a 60% year on year growth. And US commercial revenue guidance of 115% year on year growth, crushing consensus estimate. In Q4, Palantir US commercial revenue grew 13% year on year, and adjusted operating margin was 57%. the company, our company, yes, because Palantir is our company, we also generated 2.27 billion in full year 2025 adjusted free cash flow, representing 51% margin and 82% year-on-year growth. Palantir has just broken another record. Let's just refresh Yahoo Finance and see what exactly is going on with Palantir and see what exactly is going to go on. Yes, the stock is now up by 5.43%. Palantir is up by 5.43%. That is now at $159 per share. It is now at 8%. We are going to actually read the usual letter that we get from CEO Alex Karp. One of the excerpt of what Alex Karp said, he said Palantir's Rule of 40 score is now incredible 127%. Last quarter, our U.S. commercial revenue grew 93% year-on-year, and U.S. commercial revenue grew 137% year-on-year. We are also announcing a 2026 revenue growth guide of 61% year-on-year. We are N of 1, and these numbers prove it. Palantir is alone in choosing to exclusively focus on scaling operational leverage made possible by the rapid advancement of AI models, a trend that we first called commodity cognition, well before others started repeating it, said CEO Alex Karp, our co-founder and chief executive officer of Palantir Technologies. Like I said, just a recap, U.S. revenue grew a whooping 93% year over year and 22% quarter over quarter to $1.076 billion. The stock is now up by over 6%. Let's go back to the result. U.S. Government revenue grew 66% year on year and 17% quarter on quarter to over $570 million. For the deals that Palantir actually closed around that period, Palantir closed 180 deals of at least $1 million, 84 deals of at least $5 million, and 61 deals of at least $10 million. The company also closed a record-setting of $4.26 billion of total contract value, which is now up by 138% year over year. The company closed a record of $1.344 billion of U.S. commercial TCV, which is up by about 67% year over year. So GAAP, which is general accepted, accounting principle income, which is the actual way U.S. government actually prepare public books for public companies. GAAP revenue, which is actually more better than what is used in other climes. GAAP income from operations of $575 million, representing 41% margin. Adjusted income from operation of $798 million. Like I said, the Rule of 40 score is 127%. So we are going to be listening to CEO Alex Karp as soon as that is live. We are going to have to wait. That live stream or webcast will only start until the next 48 minutes. We already have over 1,000 people, 1,659 people waiting. This is a congratulations to all Palantir's shareholders, Palantir's believers. The company is crushing it. The company is moving forward. What I'm going to do now is to look at CEO's Alex Karp's letter, and I'm going to be reading that letter so that we can actually get a feel of some of his philosophical approach, because CEO Alex Karp is a man of letters, a man of philosophy, despite the fact that he is a CEO of one of the most respected software company in the world, CEO Alex Karp is actually bringing philosophy to how software is done. So I'm going to be reading that letter, and letter to shareholders, November 3rd. Let me actually look at the most. I think I need to get the most. Just bear with me. Let me get the most recent letter to shareholders. That letter actually tells more about the future of what Palantir actually believes is going to be happening. What CEO Alex Karp is actually projecting. So let me. Yes. So. Yeah. So I'm going to bring up that letter now. And while we are doing that, we just play some celebratory music to just lighten the mood a bit. Yeah, so I'm going to bring up the letter shortly. So we're still trying to get that letter. As soon as we get that, we'll be reading that so that we can put things into perspective, because that letter really tells so much story, and we should be able to get that letter up now. I think I have it. Yes, we have it. So letter to shareholders, February 2nd, 2026. We are at the outset, the very beginning of a generational project. Our financial result, those crude and imperfect metrics by which a market filled with both excitement and fear attempts to assess the value of companies it covets, haven't again exceeded even our most ambitious expectation. We generated $1.4 billion in revenue in the fourth quarter last year, a new record in our 23-year history, representing a 70% growth rate over the same period the year before. Such a massive acceleration in growth for a company of this scale and size is a remarkable achievement, a cosmic reward of sort to those who were interested in advancing our admittedly idiosyncratic project and embraced, or at least did not only reject, our mode of working. The more familiar path for technology companies has been to seek affection and capital of the public markets and to monetize at the height of expectation before entering a long yet certain contraction into obscurity. We declined to take this approach. Our public offering more than 5 years ago marked the beginning of our ascent, not its peak. And yet, we have achieved this level of growth with significant discipline, which is seemingly scarce in the industry today, generating a new record of $609 million of profit in a single quarter, representing a 28% quarter-over-quarter increase. We still remember, and we will not soon forget, enduring for years polite yet firm questions about the potential of profitability and indeed, more fundamentally, the wisdom of our approach. Other pockets of what some are not incorrectly described as an exuberant market for artificial intelligence systems may feel pressure to manage their business around their financials. Our record profit, however, is pure and uncontrived, and it is perhaps more important the consequence of a business built around software platforms, not legions of credentialed consultants with presentations and wise counsel. Our business in the United States sits at the core of this company. We generated $1.1 billion in revenue in the US market alone last quarter, representing a 93% growth rate over the same period the year before. Our rise has been and will continue to be driven by increasingly discerning set of companies and institutions in the United States that understands the value of artificial intelligence but are now declining to pay for science projects. A gulf is emerging between those who perceive the preconditions for harnessing the power of artificial intelligence and those who are far more vulnerable and adrift. Indeed, the world of AI adoption is increasingly divided between haves and have-not. Some institutions as well as nations are thriving, others have been left naked on the beach. The large language models alone will not lead us to salvation. They require means of reliable, efficiently interacting with the Byzantine complexity of modern enterprise is tangible of data sets and operations and personnel. The strings of context produced by large language models are little without software architecture that can lend grammar and structure to the output of these probabilistic prediction engines. The models must be tethered to the object in the real world, and it is that tether that means of grounding and orientation that we have built. As a result, our US commercial business, once a promising yet mostly theoretical backwater of company, is now growing at an astonishing rate, generating $507 million last quarter, a 137% increase over the same period the year before. To be clear, our US commercial business has more than doubled in the space of 12 months. Such a brisk rate of expansion, all while maintaining record levels of profitability, would be remarkable for newly hatched startup. It is essentially unprecedented, we believe, for a company entering its third decade of operation. We have arrived at this moment as a result of fierce pragmatism and nearly ruthless focus on results and outcomes at the expense of the performative and the theatrical. In 1962, Deng Xiaoping, who would architect and oversee the remarkable and sweeping opening of China's economy to the outside world, famously reminded this country that it doesn't matter if a cat is black or white as long as it catches mice. He would eventually be purged from the Communist Party for his reformist instinct and sent to work in a tractor factory in Jiangxi province. The jargon and posturing in the technology industry, the breathless anticipation of the arrival of artificial general intelligence has today reached new heights. Anything lacking a zealous focus on value being created by these technical systems, the mice that the cat actually catches will ultimately face to gray and be forgotten. It is confounding to many that the same software system that is capable of preventing a terror attack may be equally capable of preventing an unconstitutional intrusion into the private lives of citizens by the state. But that is the software that we have quite intentionally built. And such software, alongside large language models that have remade the world, is set not only to further reshape U.S. national security, but to also transform our collective ability to guide against government overreach. I'm going to finish this letter because it's part of actually what makes Palantir what it is. This letter is always, sought after, especially on Wall Street, because our CEO, Alex Karp, always writes philosophically, but very, very clearly and very, very visionary. So, in the uninvited heir of the state with the Fourth Amendment is concerned, Justice Porter Stewart wrote in Cass versus United States, and Justice Stewart reminded us in that electric and landmark case of 1967, which reimagined what constitute an unlawful breach into our most private spaces. Wherever a man may be, he is entitled to know that he will remain free from unreasonable searches and seizures. Such freedom from unwarranted government surveillance, however, whether it is an intruding eye of the state or is uninvited heir, requires construction of a technical system that is built to make possible oversight of its own use and limit, not expand, the material and information subject to access. It should indeed be uncontroversial that the single most effective means of guarding against incursions into our private lives is to invest in development of a technical platform that makes possible constraint on government actions and investigation through granular permissioning capabilities to ensure that the state and its agent can only see what ought to be seen, and functional audit logs to ensnare both external and internal threats. And let's just check on the stock price of Palantir in the after hours. Palantir has now gained over 8%. The stock is now up by 160%, $160 rather. It's now up by $160. We are just a few hours from the live broadcast. We are just less than 34 to 35 minutes. We should be able to get that live broadcast and webcast from the CEO. We can just finish the letter. And he said the construction of such platform, one that reflects our ethical commitment, should of course be a rallying cry for progressive and critical thinkers across political spectrum who profess to be interested in advancing the values of the Fourth Amendment, and yet may take the easier path, belittling, dismissing technology as the enemy, and as a result depriving themselves of any role in crafting our most capable shield against the very government that we serve. We have, as a country and perhaps well as a civilization, grown uncertain of what we believe and far too fearful, embracing any degree of culture, specifically in our communal lives, banishing sentiment and beliefs from the public and corporate spheres under an often hollow banner of inclusion. But inclusion into what? What is the common set of values and sentiment that messy yet fertile amalgamation of interest, predilections, and commitment that constitutes an authentic community into what we aspire to include? Yes, this letter is very, very philosophical, very, very academic, but that is Dr. Alex Karp. That's how he actually goes. I'll just finish the letter in a few moments. Maybe you can even come back to the letter, but we're almost done. We can just finish this letter and we go to reactions. We want to get your reactions. We want to get your feedback. What do you think about Palantir's fourth quarter 2025 results and the full year 2025 results? Please put in the comment section. Send me your message. You can send it through WhatsApp. You can put it in the comment section. Let's get your feedback. Let's get your reaction. We might not be able to finish the letter because we also want to actually look at the results in detail. Let me just see if they have posted the presentation so that we can. Still waiting for that presentation to be shared. We might have it now. So we just need that presentation. And once we get that, we can actually go through in more detail. So let's just play some tempo music. We're still waiting for the live broadcast from the board and management of Palantir, so that we can actually hear CEO Alice Kaup answering a few questions. We'll take a short break because we're waiting for that broadcast. So we are just a few moments, how many minutes? We are less than 26 minutes to the webcast for Palantir's fourth quarter results. The results has been out. I'm going to do a very brief recap of the results for some of us just joining our broadcast today, our first live stream of Palantir's fourth quarter results. We are happy to have you here. Palantir broke all the records, shattered all the records for fourth quarter 2025. Revenue growth of 70% year on year was recorded. Palantir's Rule of 40 score is now at 127%. In case you're wondering what exactly is Rule of 40, is actually a metric used by software as a service companies, mostly pure software or some mostly AI driven software companies actually use this to measure their growth, profitability, and actually the strength of the business in terms of growth. So US commercial revenue guidance for 2026 full year is about 115% year on year, crushing the estimate that Wall Street is recommending. We are waiting to get the full presentation of the Q4 2025 results. As soon as we get that, we are going to dive deep into that so that we can actually compare like for like. I keep refreshing. I know this comes with a lot of preparation, so I think we have that. No, that's still. Let's just see as soon as this can come in. So this is the PDF. So this might actually be what we are looking for. This is actually the filing itself. If we zoom in, we should be able to see a few things. Yes. So we are going to go into the balance sheet so that we can have an idea of some of these numbers that we've mentioned so far. Okay, yes, we have an idea of what we are looking at now. So for Q4 2025, income from operations was about $575 million compared to just about just a moment. I think I want to actually get this right so that we put things into perspective. Yes, this is what I'm actually looking for. Net income at around Q4 2025 was about $608 million. Net income for that same period, 2025 full year 2025 is about $1.6 billion. I'm going to check the growth because we need to actually see that presentation. As soon as that presentation comes in, I think everything just sinks and we can put everything into perspective. But we are going to actually still see what we can garner from this. Okay, what am I looking at? Yes, so we have a few data here. Revenue for full year 2025 it was actually $4.4 billion. That same period in 2024 was just $2.8 billion. Revenue for Q4 2025 was $1.4 billion. That same period in 2024 was just $827 million. This is record breaking. These are actually record breaking numbers, and it's just you can't even underestimate You can't even underestimate what this company is actually delivering. How many minutes are we away from the webcast? We are just less than 21 minutes away from the webcast. So we will still try and see if we can get the presentation. Full year 2025 is a record $4.4 billion. It's very, very staggering, which is about 56% growth year on year. Fourth quarter, like I said, $1.4 billion, 70% year over year growth. It's quite impressive, and it's just mind blowing. Can Palantir continue to grow this? Can Palantir continue to actually deliver and over deliver? It is yet to be seen. We are waiting for the webcast, which is in case you're wondering, this broadcast is brought to you by StockAtom.com, the platform, video-driven platform for retail investors to get coaching, guidance, and also build long-term portfolio. We are not an investment. We are not investment advisors. We don't provide licensed advice or personal advice. We basically share what we do, what we actually invest in at StockAtom. And if you believe in our approach, you can actually learn from here, from what we do. So basically, we share alerts, stock picks for our members, daily brief, a whole lot of premium videos that you can't actually get anywhere. Why do we invest in companies that we invest in across Wall Street, outside of Wall Street, outside of the US? We basically just share our approach to investing, and we share them through a whole lot of very, very premium content that we share about what we do, how we do it. So we built StockAtom.com for everyone looking to invest. We'll go back to Palantir's fourth quarter result. Let's check on the pulse of the market. I'm just going to take off S&P 500, and we can have Palantir alone. The stock is now up by almost 7%. We are going to see what will happen tomorrow when Wall Street starts trading. We are also going to see the futures market in the early hours of tomorrow as well. In the early hours of tomorrow, when Wall Street starts pre-market trading, after hours trading in the early hours. So we will also try to see what exactly is the pulse of the market. Maybe we can even try and get some perspective from the likes of CNBC, and we should be able to see what they're talking about. And that might actually be very, very instructive to bring in more perspective into this earnings report. Okay, so let's check out CNBC. And that could actually give us let's hear from the suits, what the suits on Wall Street are actually saying about this result, because we are very, very sure they will be buzzing about the result, and that could actually give us a whole lot of indication of what is going on in the minds of analysts on Wall Street and what they actually think.
Palantir is a key supplier to many of these.
So let's take a listen.
Weapon systems. In our note, we highlighted how they forged a major contract with General Dynamics Electric Boat to help accelerate production of Columbia-class nuclear-powered submarines. And Palantir is a beneficiary of a potential $1.5 trillion defense budget for 2027. There's different dynamics taking place with Palantir and the other software stocks.
Louis, I guess there's, could be any number of explanations for why the stock has come in as hard as it has. Obviously, the sector has been weak, but also there's a perception out there that, under a different party's administration, Palantir may not be in favor with the defense budget and things like that. So is that in the stock at this point, or how do you tell investors to think about that?
Well, Palantir still did very well during the Biden administration. They grew at a mid 20% type growth rate. They won the prototype contract for Maven Smart System. They won the prototype contract for the Titan battlefield system. So Palantir will still do, very well under a democratic regime. But Palantir.
Yeah, so we've really heard from Wall Street. We are just waiting to get this result broken down by the management, and the management will be able to actually tell us what exactly they think is going to be done by the board going forward. Is Palantir looking to actually change direction? Is Palantir going to also put more effort into the European market? Is this going to really, are they going to take advantage of the tailwind in the commercial business? Are they going to actually build new products? What is Palantir's role in what is going on in the US? Is Palantir working with the US government, especially in the immigration side of things? And how will this also affect how the company is being perceived? Although Palantir doesn't necessarily see it as a big deal, because Palantir believes the company is very much more transparent with what they do on civil liberties, on working with the government on civil liberties, and technology that actually change how people actually relate with government, and also how government relate with people. So those are some of the questions I'll be asked, because a whole lot of things going on in the US has really generated a lot of a whole lot of feedback, positive and mostly negative, to say the least. So we are just 14 minutes or less than 14 minutes away from that webcast. We'll also try and play some tempo music while we just relish this result. It's been a good day for Palantir, to say the least. We're just a few less than 12 minutes away from this historic webcast from Palantir's executive board. We'll be seeing and hearing from CEO Alex Karp, Sham Sankar, and also the CFO at the company. We will also be showing this webcast so that we can really listen. We'll also be getting feedback from elite analysts on Wall Street who also be attending the event, mostly remotely. The company doesn't necessarily have a whole lot of people sitting down in one place. So we might also hear from one of Wall Street most respected analysts who have actually covered Palantir. Is no other person than Dan Ives. Dan Ives really changed the narrative about Palantir. A whole lot of people who misinterpreted or misunderstood Palantir, Dan Ives was actually able to bring so many of these people into understanding Palantir as a business, as a company, and that really has been a game changer for Palantir as a company. We are getting just less than 11 minutes, or about, so just just going to wait it out. We need to hear from the company itself. We need to hear from the horse's mouth, so that we can actually have an idea of how Palantir is positioning itself as the next company to change artificial intelligence, and how AI is being used globally, how AI is used in commercial side of things, how AI is used in business, how AI is used in healthcare, is used in aviation, how AI is used on the battlefield, on the factory floor, how AI is used for finance, how AI is used for entertainment, for content. So it's going to be a very historic webcast, and we can't wait to hear from the board, especially CEO Alex Carp. It's just a few moments and we'll get going today. We just listened to more celebratory tempo music. It's been a very good day for Palantir, a result like no other. We are just 8 minutes, or even less than 8 minutes, to the broadcast, and we're just getting ready, and we will display that live broadcast so that we can actually join Palantir's board, So stay tuned to us. We will really want to listen and also do a closure on what we've experienced today so far. From what we can see now, Palantir as now the stock is now up by over 10%, over 7% rather, over 7%. Yeah, in the after hours, we don't actually have an idea of where the stock might actually go tomorrow. That's why from our own side at Stocker Team, we basically don't focus on short-term result. We basically look at the long-term result, and that's why whatever happens tomorrow, if we're going to have close to 10%, we are going to have close to 5%, or maybe the stock even pulls back, we don't actually believe in looking at the short-term side of things. So yes, the excitement might continue into tomorrow, and Palantir stock might go as far as 15 to almost 20%. We don't know what will happen tomorrow. There might be a big macro news that might actually change the game of play. But what we've actually seen and what is guaranteed is that Palantir's Q4 revenue is record breaking, 1.4 billion. 1.41 billion, $1.4 billion, which the company has never made in its history, has now been reported. What we've also seen, the guidance is also through the roof. Palantir's guidance for the full year 2026 is record breaking. It's also going to really change the game of play. Is Palantir actually even being able to even meet demand? Is this a sign that the company is actually getting more deals, more business than it can handle? If that's the case, then we haven't seen anything yet. If we actually look at the gap income from operations, is actually about 575 million. I've said this before, but I actually want to reiterate that for the quarter, representing 41% margin, which is quite huge for a company of this size, for a company that spends so much money on talent, so much money on technology, on compute, and the company is still able to eke out 41% margin. That's actually very impressive. We just have less than 4 minutes into the webcast, and we'll be able to actually listen to the board of Palantir. We can't wait. Everybody can't wait because we actually want to hear from the horse's mouth. Earlier today on Wall Street, William Blair, one of the companies that actually covers Palantir stock on Wall Street, has now increased Palantir's rating to outperform. They cited strong momentum in both government and commercial sectors. Despite a recent stock sell-off, according to William Blair, this upgrade comes as the company prepares to release the earnings report, which we now have. William Blair actually highlighted robust performance indicators. Meanwhile, RBC Capital, the famous RBC Capital that has always been very bearish on Palantir, reiterated underperform rating on Palantir. They pointed to a decline in qualified contract value, net new annual contract value, although they acknowledge potential long-term demand due to geopolitical factors. So, RBC Capital has never been positive about Palantir. If anything, if they've done anything, it's just to continue to be very cynical, to be very not very, very cynical, just to say the least. Philips Securities initiated coverage on Palantir as well with a buy rating and a 205 price target. At Stocker Team, our own price target for Palantir is about 250. Yes, it's over the top. Is at the top end of the range. Just put it that way. But we set last year, we said 195, and we actually broke that. The stock pullback, but we still got there. So, irrespective of what you think, 250 might not actually be a far cry. Let's also look at other analysts before we go to the webcast, which is now less than 2 minutes, if I may say so. So, analysts actually, before that report came out. So tomorrow we are going to get more guidance from analysts. Are they going to actually reiterate or actually increased their price targets? We are going to also hear from Bank of America. Bank of America has been very, yes, the webcast has now started and we can now prepare to join the board of Palantir. I will tune down now. Okay, we are about to join the webcast, and let's just listen as soon as they come live. So we can still play some music before they actually come live. Just a moment, and the webcast should start in any moment from now.
Good afternoon. I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our fourth quarter 2025 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our first quarter and fiscal 2026 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our fourth quarter results are nothing short of historic, capping off a monumental year for our business. In Q4, overall revenue surged 70% year over year. our highest growth rate as a public company, propelled by the relentless momentum of our U.S. business, which now commands 77% of our total revenue, up 93% year over year and 22% sequentially. Our Rule of 40 score reached new heights at 127, up 46 points year over year and 13 points quarter over quarter, proving that hypergrowth and exceptional profitability aren't mutually exclusive, but rather the inevitable outcome of Palantir delivering transformational impact at scale. We closed our highest TCV quarter ever at $4.3 billion, and fourth quarter trailing 12-month revenue from our top 20 customers increased 45% year over year to $94 million per customer, a testament to our customers' conviction. Our customers aren't tentatively trying AI. They're committing to it at scale with Palantir as the driving force. The rapid advancement of AI models is continuing to drive the commoditization of cognition. The next step is for the market to differentiate between those who are supplying the commoditization of cognition and those who are scaling the leverage made possible by it. We are the only enterprise software company that made a conscious choice to focus exclusively on the latter, delivering real-world value for our customers by maximally leveraging these models in production. Palantir is an N of 1. This is what makes a Rule of 127 possible. This is why customers who've crossed the chasm with Palantir, the AI haves, are defining the future of their industries, while those still on the other side, the AI have-nots, are fighting for survival in the present. As Johnson Controls noted about our work together, quote, "It is really incredible to see that you can transform a 140-year-old company with the power of AI." I'm seeing this play out across our customer base. We are moving customers from AI adopters to AI native enterprises, transforming execution into exponential advantage. This is summed up best by an executive at Thomas Cavanagh Construction who noted, quote, "We've gone all in so much so that every other software must justify its existence. And so far, they haven't been able to. 97% of our employees use Foundry every day. Foundry is our operating system." And he continued, quote, "The ontology is the secret weapon. Nothing else comes close. And not only are we getting rid of third-party software, we've replaced their functionality and then beaten them to new features, all within the year because of the ontology." Our U.S. commercial business grew 137% year over year and 28% sequentially, building on the blistering pace of 121% year over year in Q3 and 93% year over year growth in Q2, defying conventional enterprise software dynamics. This isn't just growth, it's compounding acceleration. AIP continues to fundamentally transform how quickly our customers realize value, collapsing the time from initial engagement to transformational impact. Lear noted at our recent DevCon conference their experience starting with 100 users and 4 use cases and growing to 16,000 users and 280 use cases. We're seeing the effects across our entire customer base. Existing customers are expanding faster and larger. For example, a utility company expanded from $7 million ACV in Q1 2025 to $31 million ACV by year-end, while an energy company expanded from $4 million ACV in Q1 2025 to over $20 million ACV by year-end, driven by value generated from new use cases. In addition, new customers are starting with substantial initial deals. A healthcare company completed 2 boot camps with us last summer and signed a $96 million deal with us before the end of the year. An engineering services company saw a series of demos in the fall, then signed an $80 million deal before year-end. Speed to production and transformational scale is no longer optional, it's existential. Palantir remains the only platform delivering that speed at enterprise scale. This revolution isn't limited to just companies. It extends to countries, with the U.S. leading the way. Our U.S. government business grew 66% year over year and 17% sequentially, driven by our mission impact across the Department of Defense, as well as accelerating momentum in civil agencies. The U.S. Navy awarded Palantir a contract worth up to $448 million to modernize the shipbuilding supply chain and accelerate delivery of naval vessels. This engagement exemplifies how Palantir's supply chain expertise honed across commercial and defense customers, is now being deployed to solve some of the most strategically important challenges facing our nation, including rebuilding its maritime industrial base. The strength of our U.S. government results reflects a fundamental reality. In an era of intensifying global threats and budgetary pressure, the government is turning to software that actually works as speed, precision, and decision advantage are paramount. We're entering 2026 with extremely strong footing. Everything we've built over 2 decades is converging into this moment, and we're charging into the year with unmatched conviction as the defining enterprise software company of this generation. I'll now turn it over to Sham.
Thanks, Ryan. Our focus with AIP continues to be enterprise autonomy, our normative view of the value of AI in the enterprise. HiveMind now lets the AI develop novel solutions to emergent challenges and to identify hidden opportunities. And the rest of AIP enables you to turn those ideas into an implemented reality. Closed-loop evolution of the business with AI, possible because of AIP and ontology. The HiveMind framework is being applied to broader problem sets. We used HiveMind to generate a bespoke AIP demo for a specific customer based only on their website and other public information. The company's CTO was blown away by how good the demo fit their internal challenges, even though it was only based on information in the public domain. HiveMind is just that good. We're going to continue to invest in closing the loop between HiveMind's output and the autonomous execution of these ideas at our customers. AIFD continues to delight. AIFD is now capable of powering complex SAP ERP migrations from ECC to S4. Years of work now done in as little as 2 weeks. And we are generalizing AIFD's capabilities to do this for a broader and broader set of problems at our customers. AIFD and OSDK has unleashed pro-code builders in our platforms. We serve over 1 billion API gateway requests a week from applications built by our customers on top of AIP with OSDK. Maven usage is at all-time highs, supporting simultaneous real-world events across combatant commands in the Joint Force. Maven will continue to be rolled out to all combatant commands and many more networks over the rest of this government fiscal year. But Maven is also pushing to the edge. We completed a live-fire exercise with Maven coordinating with UAV assets through our new Maven Edge agent called Mage, enabling the declarative statement of mission intent and fully onboard planning, reaction to emergent battlefield realities, and execution. AIP is becoming the default builder platform in the Department of War. Uniformed service members, primes, federally funded research and development centers, all in Maven, Vantage, Envision, Warp Core, and more, all building, not just consuming, AI applications. We're seeing green suiters and blue suiters building their own agent swarms to transform how they fight. As with any good revolution, the innovation is coming from the edge, not the program offices. It's the E4 in Hawaii, the E8 in South Carolina. These are the folks pathfinding how AI is transforming the Joint Force with every code commit they make. Gotham's new suite of integrated capabilities, platformed on Foundry, met their moment. Kairos for integrated planning and sync matrices, Nexus for dynamic command relationships and unit task hierarchies, and Workbench to automate collections, fires, and battle damage assessment. These aren't 3 standalone capabilities. There are 3 new dimensions of the prism that turn battlefield complexity into lethality. They all work together, building on each other. Warp Speed continued to build momentum across American industry. ShipOS was the most significant development in Q4, rolling out Warp Speed to accelerate submarine production and sustainment across shipbuilders, shipyards, and critical suppliers. At one shipbuilder, we took planning from 160 hours of effort to 10 minutes. At a shipyard, we took material review from weeks to less than an hour. But most exciting to me is proving what we always believed to be true, that AI will create jobs. This is Jevons paradox in action. By reducing the deadweight loss of time spent planning and ensuring the availability of materials, one of our customers was able to add a 3rd shift, because now there was more work waiting to be done that was shovel-ready and executable. We've been so impressed with the latent talent in the submarine industrial base that we're launching an American Tech Fellowship exclusively for them later this month. This will be an 8-week course to upskill users at suppliers and shipyards so they can build their own AI applications, unleashing the profound domain expertise to accelerate the delivery of one of our military's most important capabilities. Other warp speed wins: one customer, making a mature weapon system at full rate production, was able to improve root cause analysis coverage from less than 20% to over 99% in less than a week. On the other end, a different customer making a brand new weapon system that is still constantly changing designs was able to see a 40x improvement in throughput with a production system that scales with the design velocity rather than breaking under it. With that, I'll turn it over to Dave to talk us through the numbers.
Thanks, Sean. We had an exceptional fourth quarter with our Rule of 40 score increasing 13 points quarter over quarter to 127. In the fourth quarter, we generated our highest ever reported revenue growth rate of 70% year over year, exceeding the high end of our prior guidance by over 900 basis points and representing a 3,400 basis point increase compared to the growth rate in Q4 of last year. Full year 2025 revenue grew 56% year over year. On the strength of our 2025 results, we are guiding a full year 2026 revenue of $7.190 billion at the midpoint, representing 61% growth year over year. We reached another billion-dollar milestone in the quarter, with revenue from our U.S. business surpassing $1 billion for the first time. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 93% year over year and 22% sequentially in the fourth quarter. Our U.S. commercial business grew 137% year over year and 28% sequentially, and our U.S. government business grew 66% year over year and 17% sequentially. We delivered these outstanding top-line results with expanding profitability. In the fourth quarter, we generated $798 million in adjusted operating income, representing a 57% margin and exceeding our prior guidance by 500 basis points. Full year 2025 adjusted operating income was $2.3 billion, representing a margin of 50%, an expansion of 1,100 basis points compared to 2024. We generated $2.3 billion in adjusted free cash flow for the full year, representing a 51% margin and 82% growth year over year. Turning to our global top-line results, fourth quarter revenue grew 70% year over year and 19% sequentially to $1.407 billion. Full year revenue grew 56% year over year to $4.475 billion. Fourth quarter U.S. revenue grew 93% year over year and 22% sequentially to $1.076 billion. Full year U.S. revenue grew 75% year over year to $3.320 billion. Excluding the impact of revenue from strategic commercial contracts, fourth quarter revenue grew 72% year over year and 19% sequentially, and full year revenue grew 59% year over year. We closed our highest ever quarter of TCV bookings at $4.3 billion, up 138% year over year. This eclipses our prior highest quarter of TCV bookings just last quarter by over $1.5 billion. Customer count grew 34% year over year and 5% sequentially to 954 customers. Revenue from our largest customers continues to expand. Fourth quarter trailing 12-month revenue from our top 20 customers increased 45% year over year to $94 million per customer. Now moving to our commercial segment. Fourth quarter commercial revenue grew 82% year over year and 23% sequentially to $677 million. Full year commercial revenue grew 60% year over year to $2.073 billion. Excluding the impact from strategic commercial contracts, fourth quarter commercial revenue grew 86% year over year and 24% sequentially, and full year commercial revenue grew 65% year over year. We closed $2.6 billion in commercial TCV bookings in the fourth quarter, representing 161% growth year over year and 83% sequentially. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Fourth quarter U.S. commercial revenue grew 137% year over year and 28% sequentially to $507 million. Full year U.S. commercial revenue grew 109% year over year to $1.465 billion. Excluding revenue from strategic commercial contracts, fourth quarter U.S. commercial revenue grew 142% year over year and 28% sequentially, and full year U.S. commercial revenue grew 113% year over year. In the fourth quarter, we closed $1.3 billion of U.S. commercial TCV bookings, representing growth of 67% year over year. In 2025, we closed $4.3 billion of U.S. commercial TCV bookings, a 161% increase from last year, highlighting the accelerating demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 145% year over year and 21% sequentially. Our U.S. commercial customer count grew to 571 customers, reflecting growth of 49% year over year and 8% sequentially. Fourth quarter international commercial revenue grew 8% year over year and 12% sequentially to $171 million. Full year international commercial revenue grew 2% year over year to $608 million. In the fourth quarter, we closed $1.3 billion of international commercial TCV bookings, driven by long-term renewals that we signed with several long-standing international commercial customers. Revenue from strategic commercial contracts was $2.1 million for the quarter, representing 0.1% of overall revenue. We anticipate first quarter 2026 revenue from these contracts to between $1 and $3 million, compared to $5.1 million in the first quarter of 2025. We anticipate 2026 revenue from these contracts to be less than $7 million, or less than 0.1% of full year revenue. Shifting to our government segment. Fourth quarter government revenue grew 60% year over year and 15% sequentially to $730 million. Full year government revenue grew 53% year over year to $2.402 billion. Fourth quarter U.S. government revenue grew 66% year over year and 17% sequentially to $570 million. Full year U.S. government revenue grew 55% year over year to $1.855 billion. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Fourth quarter international government revenue grew 43% year over year and 9% sequentially to $160 million, bolstered primarily by our continued work in the UK. Full year international government revenue grew 47% year over year to $547 million. We closed our highest ever quarter of TCV bookings of $4.3 billion, up 138% year over year and 54% sequentially. On a dollar-weighted duration basis, TCV bookings grew 166% year over year. Net dollar retention was 139%, an increase of 500 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q4 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the fourth quarter with $11.2 billion in total remaining deal value, an increase of 105% year over year and 29% sequentially, and $4.2 billion in remaining performance obligations, an increase of 144% year over year and 62% sequentially. In the fourth quarter, we signed a few significant long-term renewals with long-standing international customers, which provided a tailwind to RPO growth. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 86% for the quarter and 84% for the full year. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $798 million in the fourth quarter, representing an adjusted operating margin of 57%. Full year adjusted income from operations was $2.254 billion, representing a 50% margin. Q4 adjusted expense was $608 million, up 5% sequentially and 34% year over year, primarily driven by our continued investment in AIP and elite technical hiring. Full year adjusted expenses were $2.221 billion, up 28% year over year. We continue to expect expenses to increase in 2026 as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. Fourth quarter GAAP operating income was $575 million, representing a 41% margin. Full year GAAP operating income was $1.414 billion, representing a 32% margin. Fourth quarter GAAP net income was $609 million, representing a 43% margin. Full year GAAP net income was $1.625 billion, representing a 36% margin. Fourth quarter stock-based compensation expense was $196 million, and equity-related employer payroll tax expense was $27 million. Full year stock-based compensation expense was $684 million, and equity-related employer payroll tax expense was $156 million. Fourth quarter GAAP earnings per share was 24 cents, and full-year GAAP earnings per share was 63 cents. Fourth quarter adjusted earnings per share was 25 cents, and full-year adjusted earnings per share was 75 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 127% in the fourth quarter, a 13-point increase to our Rule of 40 score from the prior quarter, and our 10th consecutive quarter of an expanding Rule of 40 score. Our full-year Rule of 40 score was 106%. With our 2026 revenue and adjusted operating income guidance, we are guiding to a Rule of 40 score of 118% for the full year. Turning to our cash flow. In the fourth quarter, we generated $777 million in cash from operations and $791 million in adjusted free cash flow, representing margins of 55% and 56%, respectively. For the full year, we generated $2.13 billion in cash from operations and $2.27 billion in adjusted free cash flow, representing margins of 48% and 51%, respectively. We ended the quarter with $7.2 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q1 2026, we expect revenue of between $1.532 and $1.536 billion, and adjusted income from operations of between $870 and $874 million. For full year 2026, we expect revenue of between $7.182 and $7.198 billion, U.S. commercial revenue in excess of $3.144 billion, representing a growth rate of at least 115%, adjusted income from operations of between $4.126 and $4.142 billion, adjusted free cash flow of between $3.925 and $4.125 billion, and GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
We're about to hear from
welcome to our earnings call, celebrating one of the truly iconic performances in the history of corporate performance or technology. Just to underscore some of the numbers that Glazer read in a kind of dry form, which is very hard to do. This company grew 93% in the U.S. We had an aggregate growth of 70. Yes, that's a 70 handle. We have a rule of 127. And we are guiding to 61% growth this year. Now, those results would be stellar, unusual, and sublime for a company that was in a much earlier stage of its development. But we have been doing this for quite a while, and you just cannot expect a company like ours to perform at anything like this level. At the beginning of last year, we were guiding to roughly in the 30%, which would be a stellar performance for a company. At the end of the year, we grew our company almost 20% in one quarter. If you were a company sitting in continental Europe or in Canada or in any other similarly situated country, and you grew your whole company 20% and you had a rule of 50, you would be one of the premier companies in your nation, if not in your continent. And we also did this while supporting in critical manner some of the most interesting, intricate, unusual operations that the U.S. government has been involved in, many of which we can't comment on, but were the highlight of last year and were highly motivating to all of us at Palantir. And so this really just raises the question, what do bombastic numbers like this mean? Because, you know, if you're growing a company like ours at 40%, you would then say somehow this is tethered to a broader category which is doing well. But with a rule of 127 and 70% aggregate growth, 93% growth in the U.S., you really have to look at this, and the numbers speak volumes that we are an N of one category of our own, and we are doing things unlike any other company has done, which has, of course, been confounding to people over the years because they said we were a services company when we were doing FDEs. They said that our products were somehow merely software. In fact, they are implementation and orchestration machines. And no one thought we'd be able to generate this kind of revenue while having an anemic and declining sales force. And this obviously has import for the world. And what does it mean for the world? Well, it means that, first of all, that the way in which we view value is obviously no longer relevant, that the bottom of the stack somehow is where the value is lessened in the top of the stack, where we impregnate the world with AI, with ontology and FDE, and tribal knowledge as represented at this table, is actually where the value is created. And that value is so large and so disproportionate that you can create a company that seemingly is exploding in terms of growth and quality of growth. It also means the riff we've been saying for years, that it's chips and ontology, meaning investing purely in commodity products, LLMs that are not orchestrated. Of course, it not only ruins the unit economics of your business, but it also provides the market with a very distorted view of what value creation would mean. Because obviously, if you're making revenue with no way of making profit because the cost of it is so high, that's not valuable. And obviously, if you're producing something that is the same thing everyone else is producing, it's obviously of de minimis or no value. So we've inverted the stack. We've proven that the investment in what we've done is with small numbers can have disproportionate impact both on top and bottom line. And we've also seen, unfortunately, that there's a real hesitance to adopt these kind of products in the West outside of America. And the two places leading here are China and America. And what we're seeing in America is so widely divergent. And so the non-adopters, the have-nots, are hoping for a catch-up function. But these numbers are a breakout function. With these numbers, you have broken through to a new category. It is not the category. The basket of category of AI is actually meaningless. It's the basket of category of performant value creation with the tools we have at hand, of which AI is crucial. And to believe you can go and build companies without this is supremely dangerous. And we're going to see over the next year companies that adopt things that actually work. We know ontology, FDE, orchestration is explosive and revolutionary. And obviously, companies cannot be expected to perform at this level because this is truly historic. But how do you even perform at half this level is going to be a real question for tech companies and a real question for countries. Can we produce companies that are producing what we produce in a quarter in a year? And one of the things we've got to figure out in the West is how do we do this? And this is putting enormous political pressure on our institutions because obviously political leaders struggle with how do I provide value when there's a disproportionate have and have not. Now, in the Palantir version, the haves are the workers and the people that know how to actually use these products. And even the ground truth of this is so far away from what people intuitively believe. It's actually not the capitalists against the workers, it's the capitalists and the workers. But that's very confounding to political leaders. And it's confounding to structures that don't know how to adopt this and cultures that are not producing these kind of products. Last not least, these numbers are extraordinary because they're fully organic. They're not just organic because we don't do acquisitions. We don't do acquisitions because we are a thick, dense culture, which means you'd have to fit in. And we have the perfect excuse now of not being able to do them because no one has numbers like this and it would reduce our numbers to do acquisitions. But they're also fully organic in the sense that we have no intertwined economics. Palantir has direct relationships with our clients in defense, intel, and commercial clients. We are not co-investing. We are not investing in commodity products. The numbers are pure. The purity of the Palantir enterprise, and the courage of the enterprise. And we have lots of debates internally about what we should do, how we should do it, but from the beginning, we have stuck to our very strong values of expanding what we believe is the noble side of the West, which means being lethal on the front end, meaning outside against adversaries if necessary. Hopefully, adversaries do not want to mess with us. And on the inside, meaning domestic institutions, intelligence institutions, essentially taking an incatenation of the Fourth Amendment, which is completely represented by our pipelining, foundry, and impregnating institutions with it so that every institution that uses our product is doing it within conformity of the law and the ethics of America, and hopefully a logical extension of those around the world. Thank you.
Thanks, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a question from Jeff J., who asks, how are you thinking about your international business, and do you anticipate reacceleration in the near future, for instance, due to European rearmament?
Well, Shyam and Ryan should comment on this. But one of the big difficulties outside of America, including the allies, is, and again, as these numbers show, it's not how much you spend, it's with whom. And so we're currently, first of all, Palantir is in a unique position where we really don't have the bandwidth to do anything that's difficult outside of America. So, and as this learning curve goes on, it's more and more difficult to help people understand how to implement these things. And the demand in the U.S. is so great. But the core issue for our allies is going to be, can we get to a point where there's a clear recognition that you're going to have to buy products that are much, much more advanced than what is being built domestically? And that's complicated for them because they tend to want to buy products for themselves. But if you just go back to a wider frame, is this institution load-bearing? Is the purchasing structure of a European country actually allowed to bear the load of buying the best product? Can they understand the delta in a way that allows them to make a decision that might go against the narrow economics of their own country? And I think, unfortunately, what you see is you see in the Arab and non-Arab Middle East, so Arab countries in Israel, you see adoption, you see wide-scale adoption in China, and you see lack of adoption in Canada, Northern Europe, and in Europe in general. But the real difficulty for the world is, if Palantir is going to bear a lot of the weight of this work, we are scaling. I mean, Shyam should talk about this, but like the demands on our product in the U.S. government in defense and in civil are extraordinary. So, how do you in fact even justify moving into something that's more complicated is a real issue. And again, but the issue ends up being their issue more than our issue. I think one of the things you're going to see in Northern Europe, Canada, and other places is a real pressure to move to the left and right politically very far, because the way you deal with this, when you don't have an answer to a question, you come up with ideologies that make no sense, and you try to implement them. And then that's the pressure they're going to have. The pressure we're going to have as a company, as a country, is how do we actually service the demand at the unyielding level of quality that we demand from ourselves. And the bar at Palantir is not we're the best, it's that it's got to be magical. We're not in the business of delivering the best products, we're in the business of delivering magically projects that are magical on the front line. And we unfortunately can't talk about some of that, but we've seen that in the last year. Magical implementations that have actually changed how people view U.S. deterrence. Obviously, the primary heroes here are the warfighters, but the implementation orchestration, which Shyam and many, many people at Palantir have spent tireless nights working on, has actually changed what people are able to do. If you have any questions about this, you can actually go, if you speak or read French, go into the French newspapers. One of the countries that has the clearest idea of the problem is France. But they don't really know how to solve it because the solution involves buying American products, particularly Palantir.
Nothing to add to that. That's great.
Thanks, Alex. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone. Can you hear me? So 2 questions as usual, one in the commercial side, the other one on defense. On the commercial side, the markets have already decided that 2026 is the show me story for AI. Have you seen that in the customers or software partners? Like you talk about this, I think you call it hesitancy, but like over time you have talked about like this resistance from some corporates to implement AI the way you thought it was the right way. Have you seen a change on that dynamic? The other one is related to ShipOS. Shipbuilding has not been the only thing that the Pentagon has struggled to ramp up. There is a major effort to reindustrialize the US, and especially the military-related stuff. But like, is there an opportunity to have like, I don't know, an ammo OS or a missile OS, and like where else we could see that applied?
So I would say our whole commercial go-to-market strategy is showing and actually delivering value impact to our customers directly as quickly as possible. And that's why we're seeing the stories of customers that are starting at larger sizes and expanding more quickly. We closed, in our overall business, we closed 61 deals over $10 million. That's because of the impact that we're delivering to customers. And the customers are, I'm having a lot of those conversations with those customers, and they're all it's all because we're showing them what we can do with the software, and we're showing the impact, and we're the only one that's delivering that leveraged impact from the models with the ontology, with the FD, with our products in those organizations.
Again, here you'd have to disambiguate America from all other markets, but in the American market, we have inbounds where people have already seen proof points at other companies, and not on one use case. It'll be like migration of this kind of product, underwriting, a myriad of use cases. And the conversation 2 years ago was much more, I've heard you're kind of this weird thing that might be able to make it work. In general, the conversation now is, I've heard you made this work. I don't understand where you fit into a slot. The reality of Palantir is we're not a one-slot company. So it's like, if you want to view us, what people know us for is it will work, and it'll work really well, and it'll be very quick. And then, but a lot of our customers come now with, I know it'll work. What do I need to do to make this accelerate? And then on the end where it's like not as positive, it might be, I don't quite understand how this would work or why this would work. But there's a lot less of that, and quite frankly, we're in a much better position to shape who we work with than we've ever been. And part of what we're doing, quite frankly, is shaping who we work with. Because, like Ryan is sitting on one of the more interesting deployments, both technically and commercially. And the person running that deployment on their end, de facto, is the CEO. And they're very far in the weeds. And it's like, and they're like, they've reshaped their org to absorb our product. And like, we've never had anything like, and it's the same thing, Shams, you're talking about this in the DoD, but it's not. One of the unusual things that unfortunately we can't talk about is also just how much we can shape what's going on under the hood, including like, how do you orchestrate something in a defense or civilian context? Now, it's not that we're the deciders, but it is the first time that we can help shape the footprint against which we execute. Not in all cases, but for the first time in many. And what we need to get done this year is to expand that. It's much more density of client base than volume. We're into transforming large institutions and then making a lot of money with them. It's very counterintuitive, but because of that, they see very deep alignment, and they're willing to listen to us when we say, yeah, we know that won't work. Like in the past, we had to show them it won't work. Now a lot of our conversations, look, we know this won't work. Everyone thinks this will work. This is some BS that companies tell you. It's never going to work. If you want the event planning and the steak dinner, you can have that. And quite frankly, some companies are like, yeah, we have some part of our company that's not real. We'll use some other company that does event planning and steak dinners for that. And then we're part of the real part of the business.
And on defense and reindustrialization, obviously reindustrialization is something we've been talking about for the better part of 2 or 3 years now. It's something we're very focused on. It starts in defense, but I think it goes to pharmaceuticals, it goes to chain reaction, where we're helping build data centers. So like there's so much activity there that we're uniquely positioned to go after.
Sham's being overly modest. Sham's phone rings off the hook all day, and what they want from him is, how do I do this same thing across government? That's literally what's happening.
And that's what it is. Ship OS, of course, we're starting with the subfleet, but people are asking us to help with all sorts of different weapon systems, fighters, bombers, surface vessels, drones, weapons themselves, munitions. And it's a big area for us that spans not only the production of the weapon, but also sustainment of them. And if you think about lethality, the ability to deliver combat power, you need an integrated ability to do this from the factory floor to the foxhole. And Maven is a huge investment that has changed how we fight across the joint force on the foxhole side. And what we're doing, that Ship OS is really the kernel of, and is powered by warp speed, is how we're going to reinvigorate the factory floor and provide an integrated view to the Pentagon through this.
Thank you. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Yeah, so great to see you again. And look, obviously a phenomenal quarter. My question is, does it feel like you're getting more and more of the budgets on the commercial as well as even on the government defense side, where you go in to do X and all of a sudden instead you're doing Y? Is that starting to happen now? You're just getting a bigger piece of these budgets when Palantir comes in?
Well, if you look at you look at our numbers very closely, what you will see is inexplicable growth in revenue, but not inexplicable growth in customers. And it's inexplicable growth in revenue because customers that are serious are putting a lot of their most important problems in our hands. And then the value creation, we're downstream from that, but the value creation is so large. So it's both, it's not just that you get more problems. It's that you solve them in a way that is determinative for the business, and then they pay you a lot more. And then there's also just this consensus, right or wrong, that the alternatives to us are not great. It's like, I'm constantly, before these calls, I get 50 texts, could you please be more modest? And it's an issue. But we struggle, we all struggle with something. But the thing is, I think the true answers to this, it's not like, I don't understand this false modesty of like, the customers we work with know that we know things other people don't. And we've been sticking to the way we do things for a long time. And now AI has just put gasoline on all this tribal knowledge we have in our products. And I would say, and then we're much better at actually, I wouldn't say being modest, but saying you may be a customer or a country that's not getting this right now, like Western Europe. I'm very pro-Western Europe. I've been admonishing Germany in German to like wake up because I care, not for commercial reasons. But the reality is most people there are not, they're not ready. So it's like we're in a position to say, yes, you understand what we can do, and this is how it would work. The best examples are in all the stuff Shyam is doing and other people are doing in government, which cannot be talked about. But the initial discussions are like, well, how would you shape the problem? No one's, it's like that's what people want from us, because like our weapon software is in every combat situation I'm aware of. Now, maybe the more people with higher clearances are aware of some things we're not involved in. So, and people say, well, this should not have worked, and it did. And then on the commercial side, which is, I think, of great interest to investors, I mean, that's why we have, that's why we have a rule of 127. That's why we're growing 93% in the U.S. That's why our guidance is at 61%. It was at 31% last year, at the beginning of the year, something like that. So it's like, it's because we have a very tethered and deep and dense proximate relationship with the leaders in almost every field of industry. And last, adjacent to your question, but is like, and these relationships are not circular pay relationships in any way. It's like we provide value. Not that it comes up very much, but I used to tell people all the time, just imagine we're a Swiss company, but you have to pay us a little. We're like, we deliver a high value product. We don't want any BS about getting paid. We're not going to give you any BS about why our product didn't work and offer you a steak dinner or an event planning event. We're going to deliver, and then we get paid. And we got paid last year. A lot. 127, 70, 93. Those are my favorite numbers.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
When we are thinking about what we're building, we are building these things with our internal culture, our defense clients, partners, and with a great thought to people who have put their own money into Palantir. It's just a very important part of why we continue to perform and what motivates a lot of us here, and definitely me. And I hope that you are having a great time when you run into professional analysts who thought we would never be free cash flow positive, we'd never be profitable, we'd never have a 2-handle, a 3-handle, a 4-handle, a 5-handle, and now a 7-handle on our aggregate growth, and the rule of 40 was some unattainable category. although 127 is unattainable by everyone besides us. So I hope you're enjoying the ride. There's always ups and downs, and there are ups and downs for all of us. We've been doing this for a long time, but we're having fun tonight. I hope you are too. And yeah, congratulations.
Thank you. That concludes Q&A for today's call.
So we finally came to the end of the webcast. We have seen CEO Alex Karp. He has actually said it all. Alex Karp actually believes Palantir is ready to continue to deliver much more. A few excerpts from what he said. They keep signing new deals. The enterprise business is growing faster than ever before. AIP is now aimed to give companies enterprise autonomy. That might actually sound like a buzzword, but if you want to really orchestrate AI, if you really want your company to actually be at the cutting edge of innovation, AIP actually gives you that real-time decision-making workflow, aggregate integration into how you make decision, how you get things done, how you actually change and deliver value for your customers. Palantir said they used HiveMind to actually sell new products, to show new customers how Palantir software can be very, very much more powerful in changing things. Palantir now has over $7 billion in cash and cash equivalents. The company is not doing any acquisition because they don't want to invest in commodities, because a whole lot of AI projects are basically commodities, according to CEO Alex Karp. And the company is also shaping who the company is working for. People are asking Palantir to deliver and to develop different weapon systems, according to Sham Sankar. And customers that are serious are putting their most important problems in the hands of the company. So we have seen it all. Palantir has delivered for Q4 2025. We hope to see everyone for the first quarter result for 2026. We will also do a broadcast for that as well. I hope you've enjoyed yourself today with a few glitches here and there, but we are going to actually perfect this, and we will be back for the first quarter result later in April, which we will also be doing a live broadcast. I hope you've enjoyed. I hope you're enjoying the ride. It's been ups and downs, but at the end of the day, you want to actually invest for the long haul. We have been in Palantir stock for over 5 years now, and we actually hope to actually be in this stock going forward for the long haul. We'll see you in the first quarter results later in April. Take care and bye-bye. This webcast, this broadcast has been brought to you by StalkerTeam.com. The platform for retail investors to get guidance, coaching. You can go to StalkerTeam.com to get much more understanding of how our platform works. Basically, it's video-led coaching guidance and also, analysis. We have Stalker Team Special, which is public for everyone to actually get access to. We analyze the best of the best stocks in the market. We also have Stalker Team Premium, which is some of our best premium content. We have the daily briefs that goes out Monday, Wednesday, and Friday, and we also have a few other premium alerts and stock picks for our members. Go to StalkerTeam.com today and also try to sign up to be a member for just $10 per quarter. I will see you in the next webcast, in the next quarterly results for Palantir Q1 2026. Good night wherever you are, maybe good evening wherever you are, and we'll see you in April. Take care and bye-bye.